Welcome back to another video. So today I'm going to be discussing Berkshire Hathaway's latest filings, the company which is led by Warren Buffett, indicating that half of its stake in Apple has now been sold. Just to start off, not to waste any time, yes, this is alarming. Am I concerned about Apple, the company itself, the stock, how it's going to perform in the next 3 to 5 years, its revenue, sales, anything like that? Absolutely not. But I do believe this is speaking to a larger issue of what's going on a macro scale in terms of the economy, real estate, the stock market, crypto, just overall when you look at how things are playing out in the landscape. I believe somebody that as astute as Warren Buffett sees what's going on. He's building a cash balance, as we're going to later discuss in the video, and I think he's preparing for what may come. So let's get into it. So Reuters put out an article detailing what essentially Berkshire Hathaway's recent filings showed. And if you take a look at it, they first indicate that there was a total of 276.9 billion in cash as of June 30th. That eclipsed the then record 189 billion 3 months ago, which largely came from Berkshire selling 75.5 billion of stocks. So it clearly shows that Warren Buffett is building a large cash position. You may ask for what reason. Honestly, last quarter he mentioned when they sold 115 million shares, this was for tax purposes. But as the article notes, there was about 390 million additional shares that were sold in the second quarter. This has now brought Berkshire's holdings to 400 million shares in total, worth $84.2 billion. Now, a lot of people took Warren Buffett's word on it at face value when he mentioned 115 million sold was due to tax reasons. But following up with 390 million afterwards does leave a lot of people wondering what's going on. I think Warren Buffett is one of the best investors. I think he's always thinking ahead, and I think he's preparing. I do not believe he doubts Apple in any way, but with Apple being the largest company the stock holds, that's naturally the place where you're going to look to shave some off to build a cash position. So now let's take a look at what Berkshire Hathaway actually holds within its company. So you can see at this point, Apple was its largest holding at just over 900 million. Then it has Bank of America, American Express being third, Coca-Cola being fourth, and Chevron being fifth. So when we're looking at this was as of end of 2023 holdings for Berkshire Hathaway. So Apple was still at 900 million shares. So if we think back to what the article just mentioned, they're sitting at 400 million currently. So from end of 2023 to today's current date, they're sitting at 400. So they've sold over half. Let's take a look at their March filings to see where they were at after March. So after March, Apple was still number one, but now they're at 789 million shares. So that means from December to end of March 2024, they unloaded just over 110 million shares. Now, this represents 40% of their portfolio currently. So if we take a look back at the one ended in 2023, Apple represented just over 50% of Berkshire Hathaway. Now, as I said, it's very reasonable to conceive that it's not good to have anything represent 50% of your portfolio, especially when you're trying to gain returns on a consistent basis for your clients. So Warren Buffett may very well just be shaving off, but I think differently. I believe Warren Buffett is looking around and trusting what he sees. If you look at everyday companies such as Starbucks, McDonald's, for example, they're struggling to meet sales. They're acknowledging that consumers are slowing down and not spending as much money as they used to. I believe he's looking at indicators such as the inverted yield curve, gold. These are all indicators showing you that something is going on with the economy, and I believe Warren Buffett is picking up on it. Another interesting thing to note is the amount in dividends Berkshire Hathaway actually receives from their Apple holdings. After the March 31st filings, if we take those numbers, Berkshire Hathaway owns 789,368,450 shares of Apple. Apple pays $1 per dividend. So that means on a yearly basis, Berkshire Hathaway was getting $789,368,450 in just dividends. That is a tremendous number. So now ask yourself, if you're getting that amount in dividends, the stock is performing well for you, why would you sell it? You only sell it if you feel something is coming. Warren Buffett is not at the stage in his life where he's taking on additional projects. In the last 2 to 3 years, Jeff Bezos, for example, stepped down from CEO of Amazon, sold some of his stocks so he could start building his spaceship going to space. Elon Musk, for example, he sold some of his Tesla shares to fund other projects such as Starlink and Neuralink. So you have to think about it. Warren Buffett is over 93, if I'm correct. I don't believe respectfully he's taking on any new projects at this point of his life. I think he's harvesting cash to take advantage of the economy and prices when everything crumbles. Keep in mind one thing that I always try to stress as well. Why did you buy this company? Has the fundamental value or aspect of why you bought this company changed? If it has not changed, you need to continue buying and look at any dips as opportunities. If we look at Apple's financials, one of the best things I always look at in terms of how a company's doing, if we look at their total revenue, over the last 6 to 7 years, it's steadily increasing. Yes, there's some slight dips here and there, but it's steadily going up. If we look at their gross profit, continuously going up. If we look at this column, which is the TTM, which is a trailing 12 months, this is what they're looking at for the 2024 fiscal year. Their revenue is still increasing. If we look at their balance sheet, assets and liabilities, the numbers still look great. If we look at their cash flow is increasing. If we look at their free cash flow, how much cash do they have on hand? If things go awry, they have to pay bills, they want to take advantage of acquisitions, how much money do they have? 104 billion in cash is more than some countries have. Apple is a cash generating juggernaut. So when I'm looking at this, thinking about the news on Warren Buffett, my overall premise to this all is that there's a bigger play going on in terms of the economy, businesses, and the consumer that's affecting stocks like Apple than the company itself. Us as retail, the most important thing I always say is how many shares do you own? If everything is staying the same with the company and nothing has fundamentally changed, the market will bring everything down. No matter how good a company's doing, no matter how good its revenue is, no matter what they just announced, if the market is going down, the S&P 500, the Dow Jones, the Nasdaq, everything comes with it. So you need to look at these opportunities as buying zones. As long as you're investing with a 3 to 5 year horizon or even longer, 10 ideally, this should not concern you. If you look at a chart of the market over 5, 10, 15, 20 years, there's always big drops, but it continuously goes up. As long as you keep that in mind and focus on the long term effects and goals that you're going to be able to attain by investing consistently, you'll be able to see these big disasters and news breaks as opportunities of a lifetime. Let me know what you think. Comment, like, subscribe down below. Thank you for watching.